Everybody knows money talks, but what they don't know is just how sexy it sounds when it does. Tackle Trading's Forex Report will really turn you on.
Matt Justice here for Tackle Trading, presenting the Forex Report for the week of April 6, 2015. The Forex Report, as many of you are getting accustomed to, is my opportunity to basically talk about the things that I'm looking at, the things that I'm seeing, complain about the Fed every now and then, or other banks out there, such as the ECB, the BOE, the RNB, or the BOJ, or whatever it takes out there. But anyways, coming here with the currency report here, and the biggest question I've been pondering lately, and I talked about in the open of the Forex report, is basically the number one trade out there over the course of the last 8 months, really since last June. As you can see back here in June and July, the dollar was just kind of going sideways here, and then it broke out, and it just kind of it movements to the upside. And if you just do like a standard Elliott wave scenario, you got wave 1 here, wave 2 there, wave 3 there, wave 4 there, wave 5. And if you actually want to take it even a step further, if you want to look at like the retracement levels, that was about a 38.2% retracement. That was a 21% retracement, and then this one is a 50% retracement. So fairly consistent on the Fibonacci's from the retracement levels. And then you have the extensions here, which you go up to down, and that hit literally right into the 161 target in wave 3, which is the number one targeting thing in terms of all targeting mechanisms in wave 3. This one then goes into back down into the 61.8% Fibonacci. Once again, completely, the ratios were just ideal, fantastic, picture perfect, you name it. And so as I was doing my analysis on, Elliott wave Fibonacci, on the dollar, on crude, on everything, I had one simple question. This Elliott wave here has been about as consistent in the targeting as anything I've seen in the dollar for years and years and years now. And typical Elliott wave goes into I would say about 5 waves, and then it goes into this like ABC cycle, and this be ABC, and that's kind of what is forming here. And so the question I've been pondering is the dollar done? Is the dollar movement done? Have we locked in enough gains? Have we locked in enough profit? It's been the number one trade over the course of the last 8 months. Is the dollar ending its cycle? And then, I looked at crude and I said, okay, well, let's look at crude here. And crude isn't nearly as concise on the Elliott wave, not even close. I mean, you can't even do it on crude because it's non-existent. Crude is just kind of crashing here. But you do see crude starting to form a little bit right here. You start to see it form a little bit of a left shoulder, head, right shoulder, knees and toes up here, and then look, if it breaks out of this $54 mark there, you might start to see people start to say, okay, we're in a bullish uptrend on crude again, and whatnot. So crude's kind of turning around to a certain extent. I still see pressure on crude. The fundamental analysis has not changed on crude oil, so I definitely still see some pressure on it, but price action isn't lying here, and it's really kind of forming a reversal pattern there. And so coming back to the dollar, crude and the dollar typically are not correlated, they're divergent. So if crude starts going up again, look for the dollar, a little bit of a pressure on the dollar to come back down. So the dollar's coming into this Elliott wave fifth pattern. Fibonacci's been consistent. Crude's starting to form a reversal pattern. Is the dollar run over? Is the pain train the dollar has put on every other currency out there in the world, is it now over? And I've always expected the dollar this dollar run to stop. My initial projection about 6 months ago back into this area was about into the 100 level right there. That's where it hit literally 78 cents above that level. My secondary target is up into the 110 level up here. And so, in looking at the price action, is it time to adjust those projections on the dollar in light of what's going on with the trend of the dollar, in light of what's going on with the pattern of crude oil? And again, I can't state this any stronger. My expectation was this dollar run was going to last about a year to 18 months was kind of my expectation, as the rest of the world went through their recessions and whatnot. But the one thing that has really kind of impacted that projection from the time and the price is the health and status of the U.S. economy. When you look at the U.S. economy, it was the safe haven economy. It was the strong economy out there. It was the one that everybody else came to because their economies were crashing. But in the last month and a half, we've had miss after miss after miss from an economic reporting system. From a manufacturing to retail sales to inflation to consumer sentiment to existing home sales, housing starts, durable goods, GDP numbers, unemployment numbers. All of them have had really, really big misses. And so the U.S. economy is really kind of slowing. And the strength of the dollar has had a massive impact on the U.S. economy a lot faster than it typically happens. It usually takes a few quarters really kind of build this in, but we're already seeing the economy really kind of get hurt by the strength of the dollar. We're now getting into an economic, not an economic, but a earnings reporting season, and it's going to be interesting to see how companies' earnings has projected from the health of the dollar. You've already seen a lot of companies come out there and warn to a certain extent that the value of the dollar is going to impact their earnings, and so that's a little concerning out there as well. And so, is this dollar run over? And I just don't see it yet. Maybe I'm a little stubborn. Um, in terms of my bullish projections, but I just don't see it happening yet because the underlying principles of why the dollar trade was so popular over the course of the last 8 months have not changed. The dollar is still the number one trade from a carry perspective, which means as the dollar is strengthening, institutions who have sold the dollar have to buy back the dollar, and that drives it up. It's still considered a safe haven because if you look at the economic values of Japan, Australia, the Eurozone, Great Britain, Canada, and the other emerging markets out there like Brazil and India and China and whatnot, their economies are crashing. I mean, China, it was supposed to grow at about 7%. Tracking is coming in really about 3% from a GDP perspective. They're just going through a massive slowdown in China. They're already dealing with the subprime issue in China. And so the emerging market crisis is far from being over. The economic crisis and debt crisis in Europe is still ongoing and far from over. We're still in discussions regarding whether Greece is going to exit the Eurozone or going to pay their bills. That changes every other day. I just think that in the last month, and we've seen kind of this is kind of the last month right here. In the last month, you've just simply seen the dollar just start to change because of the economic misses that we have seen in the last month. If the U.S. economy starts to see a little bit of an uptick from an economic reporting standpoint, the strength of the dollar is certainly going to come back. So I think it's a little bit of a minor hiccup regarding the dollar right now, but this level right here at 97 and ultimately down here around 95 and a half, these are very important support levels for the dollar. And if it can't maintain those levels, you're going to see the dollar reverse and come back down into the 93 range down there, and that'll be a 7% drop off the highs over the course of a month and a half to 2.5 months. And so that could put a lot of pressure on the dollar coming back down. It still is holding this $97 level. It's a very, very strong support level. The dollar did rebound later on in today's price action. And so I do not see that over yet, not the dollar. Crude is going neutral, and so I am shifting my bias on crude to more of a neutral stance because of what the trend is doing. But on the dollar, there's nothing I've seen so far that stops me from saying this is still bullish as long as it holds the 97 level. The one concerning aspect of this is if this lower level of resistance right there at 99 from the 100, that is a little bit concerning. But if you switch this out to a weekly chart, you'll see the strength of the dollar is still very, very strong, with this just be considered a little bit of a retracement. And if you look at this from a weekly standpoint, thrown up on the retracements on there, that's only about a 21% retracement right there. It could retrace all the way down into 93, but again, I do not foresee that yet. That's one of the reasons why we do this Forex report every single week, so that we understand exactly where we're at going into that week. And this week going into the dollar, I am I wouldn't say very bullish on the dollar. I've lowered position sizes on my long dollar trades. I've tightened up stop losses on them. I've lowered position size, like I said. I'm very cautious in terms of the trade management. So I would say I'm slightly bullish on the dollar, not very bullish as I have been for the better part of the last 6 to 8 months. So I'm shifting a little bit of the bias more to a slightly bullish stance than a bullish stance. And this is the first time I've done that in the last 8 months on the dollar. My crude oil is now neutral until we see one way or the other that wants to break out in any shape or form. So let's.
Everybody knows that money talks. But what they don't know is just how sexy it sounds when it does. Tackle Trading's Forex Report will really turn you on.